Lesson 2, Economic Calendar and Key News Events. So, understanding economic indicators and their impact on the markets. They are statistical reports released by government and non-governmental organizations that provide insight into a country's economic performance. Key economic indicators include GDP, inflation, interest rates, employment figures, consumer spending, and trade balances. Now, side note, if you follow us on YouTube and do our market review projections with us, you'll notice that we do go in the economic calendar and find these such events because they are high impact news. Usually there's a lot of volatility in price and it will start swinging back and forth, or it might just run heavily in one direction. These are very important to keep track of and be aware of when trading so you don't quickly get smacked out of a trade and lose a lot of money. So, back to the lesson. These indicators can have a significant impact on the financial markets, and that is exactly what I just covered without even realizing. For example, if the GDP figures are better than expected, it may cause the currency to strengthen, while weaker than expected figures may cause it to weaken. Now, I put this in here just as an overall general rule, but if you really do follow the news and see how it reacts in the market, this may be right, but at the same time, it could be wrong. So there'll be a giant wick. Say it's strong, right? There may be a giant wick, clears out all sell side, whether it's inducing people into selling or it took buys, it took out all their stop losses, and then it runs that way. So, as that is a general rule, just don't think of it as that. Like, don't say, okay, the numbers are good, I'm going to take a buy position, because you may easily get manipulated out and then it runs in your favor, or it may just not even have any effect on price, and price is going to do what it wants to do. So, take that lightly. And the biggest advice I can give you is just stay out of during news. Either get your trading done before it comes or wait for price to adjust after that initial 5-10 minutes, and then figure out a setup from there. So it's definitely essential to understand the relationship between economic indicators and market sentiment to informed trading decisions. We dive a lot deeper in this in the advanced trader course. That is when we start building our house and all the fancy rooms and the yard and the basketball courts and the pool and all that stuff. But right now we're just building the foundation, so I'm not going to go too deep into all that. But if you stick around and go through all our courses, I promise you everything you need to know, A to Z, we're there. And the only thing left is accountability for yourself once you finish our courses. So the keys news events to watch for trading. The big one is non-farm payrolls, also shortened NFP. That is the first Friday of every month, and that provides a snapshot of the U.S. labor market. Now, we just had this at the time of filming this on that Friday, and well, price ran up and down and down the rest of the day, and it was it's pretty crazy, to be honest. Next one, we have GDP. That is the gross domestic product. This measures the economic output of a country and is released on a quarterly basis. It provides an indication of the strength of a country's economy and can impact the value of its currency. Next one is central bank interest rate decisions. Interest rate decisions by central banks such as the U.S. Federal Reserve, the European Central Bank, can have a significant impact on our currency markets. So you want to pay attention to when they have people speaking, as well as any kind of news they have around that on interest rates. Consumer Price Index, also known as CPI, that is the measure of inflation and is released on a monthly basis. High inflation can lead to central banks raising interest rates, which can impact the currency values. And retail sales, that is the last one, provides insight into consumer spending patterns and can impact currency values. A strong retail sales report can indicate economic growth and lead to an increase in currency value. Now, as all of these news have a general rule of what they're going to impact, again, don't automatically assume Good numbers equals buy, bad numbers equals sell. Wait for a setup, wait for price to settle and show you where its real direction is, because that initial news release, it likes to take out it likes to take out retail traders and smaller hedge funds, all that stuff, because in order to be right, you need people to be wrong. Otherwise, there's no way to get your money out of the markets. So they have a plan. They got to get people's money on the opposite side so they can make their money on being right. So careful with these. Don't trade them. I don't even trade the news. I get my trading done before, or I wait 5, 10, 15 minutes after the news to see how price is settling down and if there's any setups that I could get in on.